Oh, you know what was really interesting, what I was following this week was this short squeeze that was going on in the solar stocks. So
Okay.
let's take a look at some of those. So you can get on Benzinga Pro, you can get the statistics of the stocks that are really short, or there's a high short interest. So this is your classic short squeeze. Now, my guess is that there were probably, I know that some news came out yesterday. I don't really know what it was, but my guess is that people were selling short of these stocks ahead of, based on the policy of the new administration that's not going to be giving as many subsidies to these green energy companies. So anyway, there was a really high short interest in this. It was about 25%. Most stocks have like a 1 or 2% short interest. So people that think the stock is going to go down, they borrow the shares from someone else and then they sell them. And the idea is that in the future, they're going to buy the shares back at a lower price, return them, and then keep the difference. So you can tell what a company's short interest is by the amount of shares that have been borrowed divided by the amount of shares that are outstanding to trade, right? So typically, if you were to look at Apple or Microsoft, my guess you'd see like 1 or 2%. These were in the 20s and 30s. So what happens is it starts going higher, and all of a sudden, some of the people that are short start to panic because if it's going higher, they're losing money. And they start to run it up. And then the classic short squeeze happens when the people who loan the shares to the short sellers basically decide to sell because the price has gotten so high. So the people that they loan the shares to are forced to go and buy them back regardless of the price. So you get this buying frenzy or this climax. And when it comes to an end, stock falls right back to earth. So Sunrun from its peak of like a week ago is down about 50%. You see where it was yesterday?
Mm-hmm.
And you can see this in First Solar.
And the ENPH is probably the other one too.
Which one?
ENPH and FSLR are the other big ones. Yeah, FSLR actually kind of came back yesterday after its move down. ENPH got destroyed.
Yeah, look at that. And then also this one here too. SEDG Solar Edge.
Yep.
So, but anyway, you know, it's interesting as a trader because it's really just your classic short squeeze. So I think for traders, I think it's a good idea to keep an eye on stocks that have really high short interest, because when a short squeeze ends, and this was probably one over here too, you know, when it ends, these things just come right back to earth. And a lot of times they can come all the way back to where they were when the short squeeze started. So what you do is you look for short squeeze stocks that are going parabolic. And then when that parabolic move ends, you just kind of wait on the sidelines to see when it starts to fall. And then that's when you would jump in there and take some trades. I would buy puts. I would never short, or as a retail trader, I would never short a stock. But I would get exposure to this in the options market by buying puts. So anyway, very interesting thing. You know, there's always something really cool going on in the stock market. And I think this short squeeze of these solar stocks has been really interesting to watch over the last week.
Something cool going on right here too, because when we take a look at all of these movers, one of the data points we take a look at is in fact the short interest. A lot of these smaller names are going parabolic when we get whatever news catalyst it is that drives them. And a quick look at the short interest really kind of prepares us for a potential squeeze effect. It kind of gives us some more data there. Great to hear you say that. You're literally preaching to the choir here today, Mark. I could not be happier, honestly.
Yeah, if something gets up to around a 20% short interest or higher, I mean, it's worth keeping an eye on, because, you know, I mean, you could get something like this, and there's a lot of money to be made in falling markets if you position yourself right.